base right now, given what we saw last week. There's not really that much of a high bar for the beats right now.
Indeed, this is a fair statement. So we have seen in Asia overall a mixed picture in terms of earnings. China is coming from a high base. So for the first quarter of next year, we probably should see,
at least for the next 4 or 6 months, within the equity markets, how best to hedge?
Sure. So indeed, the price pressure is on every investor's mind. I think it's even more actually
Thank you, Jessica Tia from BNP Paribas Asset Management there. Let's get to the first word news now. Australia's Crown Resorts will be placed under strict government supervision for the next 2 years after being found unfit to hold its Melbourne casino license. An investigation found a litany of wrongdoing there, including underpaying casino taxes and illegally allowing its hotel guests to use credit cards to access funds on the casino floor. Crown could still lose its license if the government is not satisfied that it's been reformed. We're hearing at least 2 holders of Evergrande's 8.25% dollar note maturing in March 2022 received interest before the end of the grace period on Saturday. Now, the grace period for another interest payment ends this Friday. Evergrande creditors are still bracing for an eventual debt restructuring that could rank among the largest ever in China. Hong Kong has convicted a second person under a Beijing draft national security law amid a sweeping crackdown on political dissent. Ma Chun-man faces up to 7 years in prison after being found guilty of incitement to secession. He denied the charges. The 2 NSL trials held so far have focused heavily on the use of political slogans, adding to fears that freedom of speech is being eroded. All right, global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is your first word news, Dave.
Yeah, some good news, some breaking news, some massive strength coming through in the Chinese currency right now. On this headline that Liu He and Janet Yellen spoke and discussed the economy and the importance of cooperation. That's a red headline that's crossing your Bloomberg terminals right now, and the importance of policy coordination. There really some strength coming through in dollar China. Boom. There we go. 637.81. Right. Let's tell you what's coming up here. Of course, we're looking down 15 minutes away. The opening bells, Shanghai, Shenzhen, and here in Hong Kong. This is Bloomberg Markets. China open. Hey, what's up, everyone? Welcome back to the show here. So the fix coming through on the weaker side of estimates here, 638.90, Yvonne. And also, though, the strength in the currency coming on the back of this headline on Liu He and Janet Yellen speaking and talking about economic cooperation. Some good news there, of course.
Yeah. Economic and cooperation on this call. So that certainly is boosting the currency here this morning. Turning on to some of the earnings that we saw overnight here when it comes to tech. Facebook shares rallied in extended trade. This as it reported more people than predicted are using its family of apps. Let's bring in Sue Keenan. She joins us with the latest here. So, Sue, when it came to the quarter, it was revenue and forecast did fall short, but investors seem to be more focused on growth.
Yeah, there was some good news for investors, and those who really support Facebook needed this because third quarter results showed a lot more active users of its network. The company also pledged to buy back about 50 billion more in its stock buyback. So Facebook was up as much as 2% after hours. A lot of its rivals up as well. And as for revenue growth for the third quarter, it climbed 35% to 29 billion. That was just below expectations. Daily active users from the network's apps, including Facebook, Instagram, WhatsApp, rose to 2.81 billion. Again, that came in above. Facebook, one of those companies that's benefited from the pandemic-related shut-ins. The company's sales and fourth quarter forecast, though, did disappoint, a sign Apple's restriction on consumer data collection and the uncertainty about the CEO Mark Zuckerberg gave a full-throttle defense. Of course, Frances Haugen, the former Facebook staffer, in October went public with these allegations, which were published in numerous reports. She appeared before lawmakers in Washington. Again, these issues were addressed in that Mark Zuckerberg said they're primarily not about social media, not the main driver. He believes there's going to take a lot of time to address that. In terms of Apple, here's what he had to say about the impact this ad tracking change is having?
As expected, we did experience revenue headwinds this quarter, including from Apple's changes that are not only negatively affecting our business, but millions of small businesses and what is already a difficult time for them in the economy.
All right, Zuckerberg also touted the company's latest focus on building out the metaverse, where a lot of users will be able to live in a virtual world.
All right. It seems like Facebook and Tesla, they were fighting for the headlines here today. So we saw that $1 trillion valuation market cap that was reached. What more do we know?
Well, let's quickly go into the Bloomberg, because Tesla leaving Facebook in the dust and reaching that $1 trillion valuation. It had to do with Hertz, barely 4 months out of bankruptcy. This rent-a-car company placing an order for 100,000 Teslas, first step of its ambitious comeback, and that pushed Tesla's shares up, but almost 10% intraday. That put it over the 1 trillion. It really is a landmark for both companies, and the valuation gives bondholders unprecedented equity cushion, according to those analysts.
Kingdom, live for us in New York. Let's stay on EVs here because you have XPeng, Chinese EV startup, has unveiled details of its new products and its features at its Tech Day. They include an assisted driving system, faster charging infrastructure, and a flying car. Vice Chair and President Brian Gu joined us exclusively.
P7, it is our flagship vehicle right now, selling in China. It is one of the best-selling mid-size sedan EV in the China market. We actually seeing a very strong sort of interest level in our pre-sale program. Now we're announcing official sales today. And I think this marks another milestone for XPeng as we have delivered our first product, G3. Now this is the second flagship product for us to deliver in Norway, and we're very excited about it.
Brian, what are you doing to convince buyers in Europe that your product, that XPeng's products can compete with those European incumbents that now are firmly fixed on transitioning to electric vehicles?
Well, I think the European automakers are very, strong, and they have, unveiled, strategy for EV. But I think as we, compete in the China market, we see the similar dynamics. I think for us, we just need to focus on producing the best design, the leading technologies, and really with differentiated driving experience, I think we can actually provide a very attractive proposition to European customers as well. So it will take time, but we're very confident about our product strength.
What is the new technology that will actually really help you move? Is it batteries? Is it something else?
Well, I think it's all of the above, because as a product, you cannot have shortcomings. So for our product, first of all, the P7, let's use that example. It has one of the leading ranges, driving ranges for similar products. It will have, technologies with voice, with interactive features, and I think it will present a very strong appeal to the customers.
Brian, I want to zero in on the battery technology. I know you've been investing heavily in this area, but talk to us about the raw material prices that have spiked. We know that. Are you able to absorb that cost? What is it doing to margins? Are you looking to pass that on to your customers?
Well, I think, the material price increases have led to a number of changes in the industry. First of all, it also forces, I think, players to look into cheaper designs of batteries. That's why the LFP batteries now become more and more popular in China, and I think also probably globally, because it's cheaper than the lithium batteries. But also as the scale of the industry increases, I think there's also savings that you can actually expect. So I think there's offsetting factors that really play into the dynamic. For automaker ourselves, we will focus on not just the leading technology, but the right balance of cost and the capabilities. And I think so far we have been absorbing the price increases of the batteries ourselves, and I think we have a strategy to put that in the containment.
And that was the XPeng Vice Chairman and President Brian Gu speaking exclusively with Tom McKenzie and Francine Lacqua. Good to see Tom back on the show, right, Dave?
Of course.
All right, taking a look at when it comes to some lines crossing here. The people taking some action here, injecting a net 190 billion renminbi in open market operations. You kind of combine that with the news on Liu He.
Looking at some of these stocks we're tracking here, but what are we tracking?
Yeah, we're taking a look at the property sector. Modern land very much in focus as well, just given that they missed that payment. That stock has been suspended, of course, for some time now. But we're watching some of these earnings reports leaning, the likes of ZTE leaning, talking about how they could see growth in the high 20s here. So that certainly is boosting the stock and some of these sporting wares in China as well, 4% higher in the pre-market. Chalco and Ganfeng Lithium, those are the ones that are coming out with earnings later on today. Ganfeng Lithium also kind of that Tesla play as well. We'll watch that. Agile Property, they talked about how things are still looking good when it comes to liquidity here, despite we saw bonds tumbling yesterday, but saying sufficient funds to repay their debt. Greenline Holdings came out with some earnings, and Kulu Technology, they were talking a little bit more about how they were going to plan the business here moving forward. And BYD, that stock is up some 5%, Dave.
All right, I have 40 seconds to get through four things. We're going to do it very quickly here. Analyst actions, just have a look at some changes here in ratings from the brokers. Just take your pick. We have 3 on your screens for you. We're also looking at some bond auctions. A lot of local governments are hitting the bond markets today. You also have Hong Kong selling some bills. Watch that closely. In terms of the agenda, as we pointed out, and as Yvonne was already mentioning there, the PBOC out yet again, with quite a big injection, net injection of liquidity, 190 billion. We're looking at a 100-day moving average on MSCI China. And of course, we are approaching here the benchmarks. We're looking at a risk-on session when the opening bell, just over 3 minutes away. That's next. This is Bloomberg. We're almost 30 minutes into the show today. I don't think we mentioned Evergrande once, or at least we got through it mostly without mentioning it, but I guess we'll talk about it soon because there's a modern land story that we need to get to in terms of the offshore default. But there's a lot of good news coming through, Yvonne. Liu He, speaking with Janet Yellen, and this injection out of the PBOC.
Injection of PBOC, you do see dollar China heading lower here today on the back of that phone call talking about economic and cooperation. So those pretty good buzzwords there to kind of keep the currency heading higher. You have earnings as well that are trying to drive this market higher. If you take a look at the likes of a BYD here today, ZTE, those are all opening higher in Hong Kong. So something to worth watching out for as we get closer to this open. And yeah, we're all talking about modern land. This is another property developer that has missed a payment. So you can't really forget those contagion effects at this point.
Yeah, at least as far as the riskiest part of the high yield space is concerned. Certainly probability that we might see a triple R cut, which almost is no longer base case scenario here. Here's the open CSI 300. Have a look at sector groups that we're tracking on the Chinese mainland today. As Yvonne was pointing out, there's a lot of earnings coming through. You have Chalco, you have Ganfeng Lithium. Apart from others, of course, consumer discretionary, 0.6%. Materials, 0.8% to the upside. Really, within this space, you're looking at producers or also looking at metals prices continuing to move up. Have a look at Hong Kong. I mean, you look at Hong Kong, it's not going to be on this next screen, but it's MSCI China, obviously, here. We are approaching the 100-day moving average. We're very close to that. We might test that today. We'll see what happens. If we do close above that, that would be the first time it will leave since about March. So that would be an early bullish sign, if you will. Some movers, we talked about Chalco is out with earnings. Ganfeng should be here in as well. I think we're looking at some of these Tesla related stocks, whether that's a supplier or, a peer within that space. And unsurprisingly, 3.5%. Ningbo Shushang, I think, gets about quite a substantial amount. In fact, it's going to be bottom of your screens in just a moment. Help me out. That should be about quite a big a portion of revenues here for the company.
So Angela Zhang is director at the University of Hong Kong Center for Chinese Law and has written extensively on Chinese antitrust and competition law and enforcement. You may have seen her in our Hong Kong Edge documentaries as well. Angela, good to see you. Why is the worst not over, and when will it end?
Well, I believe China is still at a very, very early stage of exploring what to do next with these big tech companies. I mean, after all, it's only been a year. Government initiated sweeping crackdown on firms. And if you look at what's been happening in Europe and the United States, which have a much longer history in regulating its tech companies, you will see that, these agencies have been way more aggressive than the Chinese counterpart in tackling big tech. So I do believe that the Chinese agencies still have a lot of scope to impose even harsher sanctions on these companies and can further tighten regulation in the tech sphere.
And Angela, you said you're watching Bureau, which recently was upgraded to vice ministerial status. Why is that so important?
Well, I mean, this has not been entirely set in stone yet. They still need to get the final approval from the State Council as well as the People's Congress, but this is very, very likely to happen. And this is a big deal. I mean, it's probably the biggest deal since the antitrust bureau was established the antitrust law was enforced since 2008, because this law enforcement campaign very often they're talking about institutional changes. These changes are long-lasting, and it could lead to far-reaching implications for Chinese antitrust enforcement, because this antitrust bureau have suffered from very severe capacity constraint in the past. Now, if it is upgraded to vice ministerial status, that will mean a much bigger budget and many more personnel for these small agencies. And that it's very likely the current bureau could be expanded into 3 times as big as it is today. So that will mean much more regulatory actions in the years to come.
If you could make an educated guess, what would be next, Angela, in terms of just regulation, generally speaking?
Well, I mean, next Monday, China's personal information protection law will come into force. And this is China's first comprehensive privacy protection law, which is closely modeled after the EU's general data protection law, the GDPR. And if you look at Europe's experience in enforcing the GDPR since 2018, it's having a very big impact on business operations. So I'm expecting China's privacy protection law, as well as a bunch of other data-related laws that have been promulgated by the Chinese government in the past couple of months, I mean, will have quite drastic impact on business operations in the very near future.
Does it affect, though, the longer-term outlook for a lot of these tech, tech companies? And the reason I ask you that is, investors to some extent, Angela, have learned to live with a shock factor, really, of regulations coming through. And now what you just mentioned is we now have to learn to live with this. It's what I'm trying to get to. Then how does this affect a lot of these big companies looking at their plans 5-10 years from now?
Well, I think the main implication is that there will be much higher compliance burden for these companies, and that will add to an ongoing cost for this business operation. And you're absolutely right. I mean, investors may have gotten used to that. I mean, given what has happened in the past year, but for sure the cost, will be part of kind of like an ongoing risk for these companies.
And there's a lot of talk about these so-called golden shares, right, Angela, where state entities have taken a stake in ByteDance. They propose investing in DD as well. How should investors look at some of these companies now? Because they're kind of on the middle ground between being state-owned versus a private company, and they're kind of hybrid now.
We don't know the exact details of those ownership structure, but I mean, of course, for the state to have some sort of stake in the firm and potentially a seat on the board will give the firm greater insight into the operation of their businesses, as you see what has been happening with Facebook in the United States, right? I mean, unless you are an insider, you don't really know what's been going on. So that explains maybe that reason why the government would want to have an interest in a closer monitoring of these big businesses.
Okay, that then takes us into, what's the date today? October 26th? What date is it today?
Yeah.
26. In about a week's time, Angela, that will be 12 months since the pulling of the anti-IPO. Do you think the company's ever going to hit market again?
Sorry, can you repeat your question? The company might be...
Do you think the company might eventually look to list yet again, or does this just change the plans of Ant completely from here?
Oh, well, I mean, yes. I mean, with Ant, it's still things up in the air, but it seems like with all the signs of jackpot touring in Europe, I mean, it seems like most of the regulatory issues have been resolved. So, I don't have a clear answer as to when we'll get listed, but I think they're very with all the signs that we have learned from the public, it seems that they're very close to a final resolution. And by the way, the PBOC recently issued the guideline on credit information. So it's that will allow the agencies to obtain more data from different financial and fintech institutions. And so maybe they have reached a deal between the regulator and the firm. So that might resolve some of the ongoing regulatory problems.
Could you help us read between the lines? Just a final question, since you mentioned regulation, because Guo Shuqing, the chairman of the CBIRC, I think recently said about half of the problems have already been addressed and more significant substantive progress will be made before the year end. How do you interpret that? Are we past the halfway mark on regulation, or does it simply get more intense from here?
Well, I think one of the crucial problems they need to address is how to decouple the link between Alipay and other Ant's financial services. And you've seen some progress has been made. And then if you log into, and you will see Huabei is asking you to obtain your consent to send your data to the PBOC, right? I mean, so it seems like that the firm is making some progress to address some of the concern. I believe that, but still, the complete decoupling remains to be done. And so I guess there will still be some back and forth between the firm and the regulator.
Angela, thank you. Angela Zhang there from the University of Hong Kong. Well, switching gears to earnings now, HSBC has painted a bullish picture for its outlook in the months ahead after reporting a jump in profit and a higher than expected share buyback. In an interview with Bloomberg, CFO Ewan Stevenson also played down the lender's nearly $20 billion worth of exposure to China's real estate sector.
None of that $19.6 billion is direct lending exposure to any Chinese property developer who is in the red category. So we're reasonably confident and comfortable with the credit exposure we've got to the Chinese real estate market at the moment. We've obviously just been through an exercise as a result of these results of looking at credit provisions in China. We are comfortable. We've managed to write back a significant amount of ECL reserves this quarter, and I think you should read into the buyback the fact that we are confident about where we're sitting at the moment in our risk positions.
Give me your perspective. Noel talked about the second and the third round impact on capital markets and bond markets. Ewan, given the ongoing Evergrande saga, do you think we're only beginning to see the impact on markets, or are we nearer the end?
I think the Evergrande situation has been well telegraphed to the market for months now, so people have been able to adjust, take views. So I'm not saying never, but our view is that we're not going to see any material fallout as a result of this.
Do you think the Hong Kong market, I mean, Hong Kong is a critical market for you. Is the Hong Kong property market insulated? Do you get a sense from what's happening with Evergrande?
Well, Hong Kong, as you say, it's a third of the group's profits. It's our most important market. I think that the Hong Kong real estate market has proved to be resilient through many, many cycles. There is effectively a shortage of good quality property in Hong Kong, and our exposure to the Hong Kong property market is significant, but our coverage ratios are high. And we don't see any particular spillover impact at the moment into Hong Kong.
Few friends that left Hong Kong a few years ago, be happy to hear that guidance from you in terms of the scarcity value. Look, we've had lots of names talk about risk aversion to China. I don't need to give you a laundry list. Do you think global investors' risk appetite for Chinese assets is weakened, materially weakened?
Well, all we can see is through the lens of our own business. Our revenues in China were up 20% year on year. Our profits were up more than 30%. We're continuing to invest heavily. We started up a new life insurance venture this year called Pinnacle. We're already up to close to 500 advisors into that business. So for us, we continue to be very bullish about the long-term growth opportunity in China.
And that was HSBC CFO. They're speaking with our Manus Cranny, and we'll be on top, of course, of all these financials coming up because UBS is coming up next in a couple of hours. They drop later. in about, give or take, about 3-4 hours from now, I believe. And you can, of course, turn to your Bloomberg for more on those results. That's TLIV Go. We'll be having a live blog to discuss that. And also, we'll be speaking with the CEO of the bank there, Ralph Hammers, will be joining our Madness Cranny and conducting that interview out of Zurich later today. Catch that on those times you see on your screens. Yvonne.
All right, let's get to the first word news now. The lira has been making a recovery after Turkey's president dropped his demand for 10 Western ambassadors to be expelled. Recep Tayyip Erdogan said the envoys had issued a statement to undo what he called the slander caused by their earlier joint demand for Turkey to release a businessman and government critic who's been in jail for 4 years. The U.S. is suspending economic aid to Sudan after the military arrested the prime minister and other government officials. A State Department spokesman said the $700 million package has been intended to support Sudan's democratic transition. Sudan's military rulers say they're dissolving the country's highest decision-making body of the Transitional Power Sharing Administration and will appoint a new government. The SEC has won a concession in its drive towards regulating the $131 billion stablecoin market. We're told the Treasury Department and other agencies will publish a report this week saying the SEC has significant authority over tokens like Tether. Now, the report will also urge Congress to pass legislation specifying the coins should be regulated similarly to bank deposits. And those are your first word headlines. Dave.
Yeah, Yvonne, 50 minutes into the session, we're tracking this key resistance level on the MSCI China Index for the first time since about June. We're close to that. But the last time we were trading above that was all the way back in March. We're still slightly below it at 96.46. And that level is roughly, if I can see that, 97.23. So we'll take you through, of course, all the market action plus all your top stories just ahead. This is Bloomberg.
All right, a live look out of Melbourne here this morning. Of course, we're continuing to watch that Crown inquiry that just came out earlier this morning. But in the meantime, we're taking a look at travel as well. Vaccinated travelers from the likes of India, China, and Europe will be able to travel to the U.S. from next month. The shift in policy, one of the biggest shakeups of travel rules since the start of the pandemic. Let's get more now from our senior medical reporter, Michelle Cortez. Yeah, these are big moves here and big developments.
Absolutely. We're going to see more travelers into the U.S. People are going to be able to arrive more easily than they have in the past, with the exception of people who are unvaccinated. For them, it's going to be a little bit tighter when it comes to the testing. But as a general rule, we're going to be seeing increased travel, which is great news for the U.S. and for the travel industry.
Michelle, when's it going to happen?
On November 8th. So just a couple of weeks here, we're going to start seeing floodgates opening. So book your tickets now, I guess, is the message.
I'm not going anywhere because I can't come back unless I want to stay in a hotel for 3 weeks. But take us through, of course, the thinking that went behind this. And is this going to happen for sure?
It does look like it's going to happen for sure. The briefings have been happening in the U.S., allowing people to get information, start booking their travel information. We are going to see implications for the travel industry. As I said, airlines, of course, have been hard hit because some of the most profitable routes and the biggest numbers come from Europe and China. The significance here also is who is allowed in, depending on what kind of vaccinations you receive. If you've been vaccinated with any shot that's approved in the U.S. or approved by the WHO, which includes China shots, that's a very big move for the U.S. Of course, Russia's the Sputnik vaccine is not one of the ones that's approved. So if you're coming from Russia, you might be just out of luck.
Yeah, and so you're seeing the U.S. opening up more in line with Europe now. I'm just wondering when it comes to China as they deal with yet another outbreak. I asked this question to our economist earlier, but just how much further can they go with zero COVID? Because it seems like even with these strict guidelines, COVID is still breaching into the mainland.
Right. We have a story out today that speaks exactly to that, right? China has been unbelievably successful when it comes to getting corona to zero every single time. But boy, it's having to do it every few weeks now. It gets to zero and then boom, another outbreak has occurred. And they're going to continue to see that over and over again. We saw both in Australia and in Singapore. They were both trying to go to COVID zero and the virus took that option away from them. They're seeing thousands of cases in Australia, also in Singapore, as soon as they started, even before they started easing up, but then when they allowed even the slightest iota of reduced restrictions, and China might be encountering that at some point. But at this point, they're really trying to keep it locked down, certainly until after the Olympics.
Michelle Cortez, our senior healthcare reporter. Now, coming up next, Casino Crown, we're up just 8.7%, coming off highs of the day, though, but still substantially higher, down to them being able to keep that license on certain conditions. The details just ahead. This is Bloomberg. All right, beautiful late morning over there in Melbourne, and we're looking at Crown Resorts up 8.7%, off highs of the day, though obviously still substantially high. That's after the gaming company was allowed to keep its license to operate its flagship casino there. That's despite this report into illegal conduct at the casino. Paul Allen joins us right now with more on this and to tell us exactly how Crown was allowed to keep operating, Paul.
It was an interesting situation, David. Crown found unfit to hold a license, but at the same time allowed to keep that license. So it will continue to operate for the next 2 years under supervision. In practical terms, what that means is a manager has now been appointed to supervise the company. That person will have unfettered access to the entire casino, all of the accounts as well, and have the power to veto board decisions. It comes on the heels of this report, which was released after 8 weeks of hearings, and a damning report it was too, that found misconduct within Crown, including illegal, dishonest, unethical behaviour. So shares rising, as you say, because this was a let-off, really. The Victorian Premier said he was willing to cancel the licence of Crown's Melbourne Casino if that's what the recommendation was.
Yeah, but they're going to be under some supervision for 2 years. What does the future hold then for the casino operator?
Well, at least they still have the license in Melbourne. They still have a license to operate in Perth, one of their other properties, but the Western Australian authorities are also investigating Crown there for similar reasons. And of course, here in Sydney, there's a glittering new multi-storey development right on the waterfront. It's the tallest building in Sydney. That contains what was meant to be a flagship casino for Crown as well, but no license to operate was issued by the New South Wales government for the same sorts of reasons. So Crown, even though got a reprieve today, still severely weakened. Suitors have been circling, including Crown's rival Star Entertainment, although Star Entertainment's now facing similar allegations. And Blackstone Group has also shown interest in buying Crown as well. But it's been a spectacular fall from grace for a company that used to have properties from Las Vegas to Macau, as well as here in Australia.
All right, Paul, thank you for that update. Paul Allen there joining us from Sydney. Let's do a quick check at the latest Business Flash headlines now. Citi is winding down its consumer banking business in South Korea. The lender says it will continue to provide services for existing contracts until they expire or are terminated, but new sales will be stopped. Citi is refocusing its Asia and EMEA presence on 4 wealth centers: Singapore, Hong Kong, the UAE, and London. SK Hynix reported record sales as ongoing shortages drove up semiconductor prices in the third quarter. An operating profit beat estimates, rising to $3.6 billion in the 3 months ended in September. However, the strong demand for memory chips during the pandemic is projected to turn sluggish this quarter as consumer demand for PCs cools and manufacturers are forced to slow orders due to supply chain issues.
Okay, a quick look at markets, Yvonne. Let me start off with the EV makers and EV-related stocks. There's also BYD and the story for BYD also on top of the Tesla story, really on the back of the HKX allowing them to spin off the semiconductor unit. So we're looking at gains here across the board. We're also looking at education stocks, Yvonne.
Yeah, Coolant Energy, Coolant Tech, I should say.
Right.
Gosh, I get it all mixed up here. They're talking about how they're going to start letting go of some of these tutoring or after-school tutoring as well. So we are seeing these education stocks fall on the back of that, the likes of China Yuhua Education down some 2.5%. And coming up, we have an exclusive interview with Tellurian Vice Chairman Martin Houston, the LNG company, seeing a stock rise 190% year to date as gas prices soared, too. We also have the Australian Minister for Trade, Tourism and Investment joining us. This is Bloomberg. 9 a.m. in Beijing and Shanghai. Welcome to Bloomberg Markets China Open. I'm Yvonne Mann.
Good morning. And I'm David Ingles is counting down to the open of trade on the Chinese mainland and here in Hong Kong. Let's get to your top stories today. Some positive news out of earnings boosting sentiment across equity markets. That's even as inflation risks continue to intensify.
Modern Land misses a dollar bond payment in the latest sign of stress in China's property sector.
And Tesla joins the $1 trillion club, overtaking Facebook to become the 5th largest listed company in the United States.
Yeah, we'll talk about that, right? Joining that $1 trillion club. And of course, the earnings picture looking pretty good as well. But still, we're still dealing with the stresses of Evergrande once again with Modern Land, now the latest to miss that payment.
Yeah, they said that. And when you look at the totals, and we've run the numbers, of course, our colleagues here at Bloomberg, we're now at what? Let me just get that record correctly. $8.7 billion in terms of the offshore bonds that have now essentially defaulted. So we'll talk more about this and what this means really for refinancing and just contagion costs. Meantime, though, I think we should also emphasize, as we look at our approach to the open here, is that interbank funding rates in China are actually falling because of those cash injections from the PBOC. So we'll look at what that means really in a couple of minutes when we do get some open market operations, perhaps out of the PBOC. Will they inject some money yet again here? 190 billion was the one yesterday. Have a look at where we are market-wise. S&P futures a third of 1% to the upside. MSCI Asia Pacific, your two-year break-evens are very much in focus today. I think we're at 311 right now. So just holding steady after the spike we've seen in the last, 5 weeks or so. South Korea's in focus. Your GDP numbers coming in at about half of what estimates were sequentially. That's quarter-on-quarter, or S&A. We're looking at Australia, and within that market, Crown is one stock we're watching very closely. Can we have that up, please, very quickly? Taiwan's also very much in focus as we approach the earnings season, and a lot, of course, the hardware and Tesla suppliers there, 8.7% for Crown. Commodity markets, Yvonne, you and I were talking about the softs. You look at Apple, you look at hog, wheat, rapeseed oil. Rarely do we talk about this. 13-year high on that. And, of course, we're just getting some lines here out of the NDRC as it pertains to coal and stable price benchmarks, perhaps. There we go. Coal is down a further, continuing to see this rally, up about 2%. And futures, as we approach the open, 27 yield. MSCI China is looking to retest its 100-day moving average for the first time, I believe, since June. Yvonne.
Yeah, I think that's the first time we've ever checked Zhengzhou Apple futures. But this is what we're dealing with now with winter coming and how it's really roiling the commodity markets as well. As we mentioned with those raw material prices, especially when it comes to metals, have been climbing after Beijing moved to steady investors' nerves over the economy, and a Delta outbreak may be the latest now in a shock to hit China's slowing growth. But Bloomberg Economics says not all bad. Let's bring in Chang Xu, our chief Asia economist. She's here. How can we compare this economic shock from Delta to the ones we saw recently?
As you mentioned, the timing is not great. Yeah, China is under enormous pressure, power shortage, and regulatory tightening. But this time, if we compare the impact on consumption with the Nanjing outbreak in the summer, we think the impact could be smaller. There are some mitigating factors. This round, the regions that are affected are less affluent. I mean, apart from Beijing, Beijing is important economically. And other regions combined with Beijing, this round affected, it's just 8.3% of GDP. But in Nanjing outbreak, at its height, the affected areas was over 50% of the GDP. So that's one mitigating factor. And then this round, the government is getting much more better in controlling, fine-tuning the containment measures. Most of the region lockdown are pretty small, just residential areas. Unlike previously, it tends to be districts after districts that were locked down. And timing is better as well. It's not during the summer peak travel season. It's not before the major holidays like the Nanjing outbreak. Some mitigating factors there.
Chang Xu, then, to your point, I think that's very important to emphasize that as of right now, the affected provinces are less affluent, so as a percentage of GDP, smaller, and it's also less widespread. And not to say this is going to spread, but in the event that the outbreak then widens to other places, can you talk a little bit more about what you just mentioned there, that the government response has really been more fine-tuned and in terms of lockdowns have really been smaller and narrower compared to what